Welcome to Deal Playbook, the show where we decode the real strategies of leverage behind scaling, acquiring, and exiting. I'm Tom Shipley, and after building and selling 16 companies, generating over $2 billion in sales, raising hundreds of millions in capital, and leading through chaos and opportunity, I've learned one thing. Success doesn't come from playing harder, it comes from playing smarter. Every episode, we will break down tactical frameworks, investor insights, and mindset shifts that move you from deal hunter to deal architect. This is your insider's guide to creating exponential growth and wealth through leverage, capital, and connection. Welcome to Deal Playbook. Let's get to work.
One of the most important skills is storytelling, because storytelling, whether you're selling, whether you're hiring, whether you're fundraising, whether you're building, it all comes down to telling a story, right? And so if you're selling software, if you're building an agency, if you're selling a beverage, like what are you communicating to that customer? You're telling a story. You're telling a story to try and get that customer to buy that product or buy that service or hire that company. And so I think storytelling is the most important skill.
I'm so excited to have with us Nate Cooper. Nate is the founder and managing partner at Barrel Ventures. So we're going to be able to take a look as far as what it's like to invest as a VC in interesting type of platforms, as well as he's invested in over 39 companies. We're going to chat a little bit about their investment, their early investment in unicorn Ollipop, and some of the other roll-ups that he's been involved with. So let me start with welcome, Nate.
Thanks, Tom. Thanks for having me. Excited to be here.
So what I'd love to do is before we go into background, maybe you kind of share is what you're involved with and what you're doing now, and then we're going to go back a little bit in history of how you got to here.
Yeah. So I run Barrel Ventures. We are an early stage venture capital fund in Chicago. We invest globally, and we invest kind of anything that touches the broader food world. I say from pre-farm to post-fork and everything in between. So ingredients, packaging, supply chain, software, brands. If it touches food in any way or has the potential to touch food, we'll look at it. All of our LPs are families, corporates, execs kind of throughout food and beverage. And so if you're building something in this industry, I'd put our network and expertise and connections kind of up against anyone.
That's amazing. Now, is there anything that you in the food world you won't invest in?
So anything in the food world I won't invest in.
Such as restaurants?
I say it would take an act of God for us to do another restaurant. It's too hard.
Yeah. Probably that's a good story also, a painful one.
People are too picky.
Yeah. Okay. Outstanding. And then tell us a little bit about how you got to be doing what you're doing now and how you started Barrel Ventures.
Yeah, so I grew up in the food industry. Family's been in it for 100 years. After college, I helped start a restaurant chain, as I mentioned, with the former president of McDonald's and some other guys, and grew that quickly. And then after doing that for a bunch of years, I said, if I spend another day in food, I'm going to have a nervous breakdown, and decided to go back to business school. And of course, started another food company while in business school. And we created a business called Wise Apple, which was essentially if Lunchables and Blue Apron had a baby. And that business took off, grew really quickly, raised a bunch of venture capital money. We ended up getting screwed over by a large strategic. And then I said, what do I want to do with my life? I had no idea. And, was fortunate just because of my history and family history. I see a lot of deal flow and said, you know what, maybe I'll write some small checks and figure something out along the way. And I think one of the reasons I've been successful is because I had no idea what I was doing. And the value we would provide, I think, is head and shoulders above most traditional venture capitalists. And so, we'd write a check and get our hands dirty, and it just kind of sprouted from there. And I'm very lucky that I get to do this on a daily basis. I don't consider this work. And I would say it's kind of an accident of how I ended up here.
So just give me an example when you say that you roll your sleeves up, you get your hands dirty, and you really the value you add. Give me some example of what is that kind of like?
Yeah, so I've sort of been on every side of the table, from investor to operator to capital allocator. We will there are companies that we talk to on a daily basis. There are companies that we talk to once a quarter, once a month, whether it's introductions to strategics, distributors, retailers, fundraising. Um, I've been in the depths of the pain myself as an entrepreneur. And so I'm happy to sort of share my experiences and get my hands dirty with these people. And so, we have a company that's closing a round today. And, we've made countless introductions on sales for them and customers. And then, they're closing about a $4.5 million round, and we introduce them to the lead and the second largest check in their round. And so I consider that my duty as an investor to do. And so I love doing it. But a lot of investors, weirdly don't.
That's amazing. What is your favorite investment story at Barrel?
I think this is kind of cliche, but my favorite investment story was really the first check I wrote, which was into Ollipop. And that
Ollipop was your first check?
was the first real check I wrote. Yeah.
Wow.
After my business.
Incredible. So, and you had the foresight to invest in a unicorn.
I had no idea what I was doing. I had no idea that it was going to be successful. One of the founders came over to our house for dinner. He walks in and my wife goes, who wasn't my wife at the time, hey, I made chicken. And he goes, I'm vegan. And so we started off on the wrong foot there. And then fast forward, we tried 3 of their products that are kind of identical. The brand looked identical. The cans looked identical. The product tasted identical to what it does today. And David left. And my wife, Ariel, goes, that was disgusting. Please don't invest. And thank God I didn't listen to her because it's been the craziest thing I've ever seen and one of the craziest things I probably ever will see. And that was 7 years ago.
Now, how much capital had they raised at that point?
$0.
So you were the first.
We were one of the first checks in. Yeah, one of the first checks in. And they hadn't done $1. And they were not yet in a grocery store.
Really?
Yeah.
Wow. And then what was your what was your involvement with that brand as far as in the early days?
We helped introduce them to distributors, to retailers, to other investors. I think we are one of the only, if not the only investor who's kind of invested in every single round since. And they don't need my help anymore. They've just done an incredible job of executing and operating. And that's one of these things that, I think when I first did the investment, I said to myself, if these guys ever get to $50 million in sales, it'll be a home run. Now they're doing $50 million a month, right? And it's been the craziest 7 years of anything I've ever seen.
Wow. So, from what you can share, where are they now? Is there a value to the business right now overall?
The last publicly reported value, JP Morgan invested at almost a $2 billion valuation. The business is profitable, growing at a crazy pace. Their competitor, who kind of copied everything they did, sold for $2 billion to Pepsi a little while ago. I think the sky's the limit for this brand. I look at it and I say, this is not a better for you soda. This is not a prebiotic soda. This is what the future of soda looks like. And, yesterday Pepsi just announced that they're doing a prebiotic version of Pepsi, which is kind of funny.
Yeah. So if looking at as they're looking at strategic alternatives, what are their options now that they should be considering?
What are their options? I think, when you're a profitable business, you have optionality. And so for a large business of that size, they can sort of write their own destiny and choose what they want to do.
Mm-hmm, mm-hmm. No, that is incredible story. So that was your first investment. How long did it take before you realized that this is really going to be a strong investment?
I think the second year, I was excited about it. Year three, I was okay. There's something here, but had no idea, how quickly they could grow.
Yeah, yeah.
They 10x from year one to year two. Then they did 3x that. Then they doubled, and then they tripled again. Uh, it seems like an overnight success, but I didn't. Even when they were doing, $30 million a year, I had no idea that at some point they're going to be doing, six, 700, right?
Yeah, yeah, that's amazing. Now, how many active investments do you have right now?
Um, Probably close to 30, maybe a
30.
little more.
And how closely do you track the investments, and how do you manage that portfolio?
So very closely, we have, I'd say I talk to, in the fund, we have 24. I talk to at least each company quarterly. If I don't get I get um, updates from them usually monthly. There are companies that I talk to 3 times a week. There are companies that I talk to once a month. There are companies that I talk to, 3 times a quarter. Uh, the goal is for them not to need my help and not to talk to me every week.
100%. Yeah.
Yeah. And so when they reach that goal, I'm more than happy to sort of pass them along.
Now, do some of your portfolio companies that you work with, are they doing acquisitions? Or are you involved with acquisitions with them?
Some of them have. Uh, I'd say most, a lot of the stuff is really, really early when we invest. And so
Hmm.
there's always the case of, do we grow organically? Do we grow inorganically? Right. In early startup world, when cash is sparse, right, it's
Yeah,
hard to do acquisitions. But if you
yeah.
can make acquisitions and sort of make the risk reward worth it, then it's really interesting. And we've seen a couple of those cases in our portfolio.
Um, I think when we chatted once, you mentioned that you were involved or are involved in a roll up.
Yeah, we have a distribution business on the family side that the business that distributes kind of everything, packaging, machinery, and supplies to restaurants, grocery stores, and C stores kind of throughout the Midwest.
And so that's scaling through acquisitions.
Yeah, it's a combination. I think we've done 11 acquisitions at this point, both geographically and then into different categories, but also all to the point of where, hey, can we sell more under this brand name or do more services or
Mm,
help more of the store? Um, so it becomes more of a one-stop shop.
mm. Um, and who's doing the investment thesis behind that, the building a relationship, the sell side or the buy side processes for developing the pipeline, the due diligence? How's that work in those companies? In that
So we
company?
hired a CEO, an external CEO to run the business a few years back. And then we have, business brokers or, small investment bankers who know what we're looking for.
Mm-hmm.
Um, and this is an incredibly, when you look at every industry, whether it's the agency industry or distribution business, there's hundreds, if not thousands of these businesses everywhere you
Mm-hmm.
look.
Mm-hmm.
And so figuring out what's quality and what's not and what's quality revenue and what's going to be beneficial and create synergies, I think is real important. And so we also, our CIO and our board spends a lot of time on that. But the CEO spends a lot of time on that and making sure that the team around the CEO, I think, is something that has been really critical for us, where he can go and say, "Hey, what's the future vision look like? What do we need to buy? What do we need to build?"
Mm-hmm. Mm-hmm.
But have the confidence that the team behind him can run the business while he goes and does that. Because if he doesn't have the confidence in the team behind him running the business, then he's never going to be able to go and focus on that other stuff.
No, 100%. So is he thinking about hiring a single corp dev person and bringing it in house to do more of it?
Not yet. That's the benefit of where we have the back office of the family office where we can sort of do that for him or
Mm,
complement him with that. Um, at a certain point, maybe we do get there, uh, but he's kind of doing that most of the time.
no, that's smart. That's smart.
And that's your CIO in the family office.
Yeah.
Now, how does a family office operate different from a VC?
I would say venture is much more high risk, high reward, right? In venture, we're looking for the Ollipops of the world of, hey, can we make 100 or 1,000 times our money, right?
Right.
In the family office, it's first and foremost, don't lose money, right? It's about preservation and how do we build slowly? And, there's no timeline. There's no sort of external pressures. It's evergreen, and it's a very different world. And the valuations in venture versus, typical private equity, venture, the valuations are, you make them up, right? They're pie in the sky versus, private equity, it's formulas on a spreadsheet. It's a lot more financial engineering.
Right. What's interesting is that, let me ask one other question about the VC. When you look at investment in your portfolio, when you basically are taking your bets, like I said, your 39 that you've invested in so far, do you have a hypothesis as far as what are companies that are not going to make it? What percent are those that are singles, doubles, and then you can never count on unicorns, but at least what you consider a home run. Do you have a hypothesis on what the portfolio looks like?
I think venture is one of these things about the power law, right? Where there's going to be one or two investments that, return the fund hopefully or more. And then there's, a certain amount of them that are going to go to zero. And, some of them you're going to get your money back or 2 times your money or things like that. I think portfolio construction is a really important thing when you look at a venture fund, right? And if you have 20 to 28 investments or 24 investments in a venture fund, you got to sort of model that out. The other challenging thing about venture is, let's say every year I look at 1,000 companies, right? I don't get to look at all 1,000 of those companies at one time and say, hey, pick the 5 best ones that you want to do, right? You have to say, hey, I'm looking at something in XYZ category. Am I going to see something better in the same category 2 months from now? Or do I want to invest in this company? Because I don't like most people don't like investing, directly in competitors. And so those are some of the challenges there. I think also that a lot of times you don't really know, what I hypothesize right now or 6 months ago or a year ago of what, could potentially return the fund or are going to be significant value drivers within the fund is going to be vastly different, 18 months from now, potentially, right? And we're investing so early, pre-seed to Series A, that a lot of these times it's an idea in a spreadsheet or an idea in a PowerPoint, right?
Wow.
Sometimes it's a little bit later, but oftentimes it's super early. And some things pivot, right? Slack was a video game, right? Before it became Slack, right? Never in a million years did I think Ollipop would be as big as it is, right? The last beverage investment we made was in this company nowadays, which, we invested, I think, 8-9 months ago, and the company has just gone vertical since. It's exceeded everyone's expectations, and who knows what's going to happen there. But
wow,
it's fun to get aboard some of those rides.
And are you raising a new fund, or what is your plan as far as Bill?
So most venture investors, I think, raise funds probably every 2 years, some 18 months.
Okay.
It's a little uncomfortable for me. I like having sort of a longer deployment period. And so we'll raise a new fund probably later this year, every 3.5 years. Our deployment period's 4 to 5 years. The smartest lesson I learned was if you're known for everything in this world, you're known for nothing. Right. And so we've built a reputation and backed that up with facts and examples of within this vertical that we play in, the broader food world, there are a few people who can do what we do. And so I think being vertically focused, in a category that's not AI, right, where people are just throwing money left and right, I think it's more prudent to be be investing the entire fund in 18 months, right? And so we're probably got a 4 to 5 year deployment period, and we'll go out and raise a fund every 3.5 years.
And then has your funds been, every time you go and raise a new fund, have they been growing over time? The size of the funds?
This will be our third fund. The first was just our own capital. My goal is to keep them small. There's a lot of people, I think a lot of what's wrong in venture is people just chase AUM, right? And my goal is to make money on when my investors make money and not on AUM. And so I know the category that I excel in and the size that I excel in and the stage I excel in. So I have no desire to raise massive funds. I want to keep them small.
And what is the lifetime of a fund? So when someone comes in and invests, what is the investment horizon?
10 to 12 years.
Okay.
Yeah.
Wow.
The hard thing about
private equity.
Yes. The hard thing about venture is that the losers happen quick, right? And the winners take a little while to marinate.
Yeah. So when you're going out raising for the next fund, it's kind of look at, if there's a unicorn, great, but if not, it's tough to really evaluate the success of the overall portfolio.
You start to see, within a couple of years, you can start to see some real progress, right? You start to see what's distinguishing itself. But, there are companies that, even in today's world, there are companies that pivoted and sort of went sideways for years. Then all of a sudden they find an unlock and reach that hockey stick growth.
So let me pivot a little bit and talk about family office. And the reason why is I think that there is a lot of discussion, a lot of information out there about different segments of venture and different series that people do, and when they're running, when they're starting and launching, and how they're doing, they're bringing in investments, and the flip side of the fund. Family offices is there's a number of people in my community that would love to work with family offices, but don't really understand the world of family offices. There's just so many different definitions of what is a family office, and then what's the best way to approach, work with them, find the right partners. So maybe you can give me some insights on that.
I think there's an old saying: if you've met one family office, you've met one family office, right?
I've never heard that, but that's great.
Yeah. It's maybe they just switched up family office with something else, but everyone is so unique. Everyone's so different. I think that the unique thing about some family offices is these are people who are families who made money like doing something that they have real expertise in, and so oftentimes they're going to focus on the area that they have expertise in, and so the lesson I give is, look at these, whether you're looking at family offices, private equity funds, companies, think of them all as, they're investors first and foremost, right? And so if you're raising money for a marketing agency and you go to a family office who made their money in automobile parts, right? It's not going to be a fit, right? Similarly, if you are raising money for a beverage and you go to a private equity firm who specializes in business services, like, it's not going to be a fit. You got to know your audience and know who you're pitching to, and make sure that what they're interested is what you're selling. It's not just, it's an interesting investment and so they're going to invest in it. No, I think it has to be something that they understand for the most part.
So if someone wants, basically, I am want to roll up in a certain, I'm going to do a roll up in a certain sector, and let's just say it's, for the fun of it, it's HVAC. And so, and I want to go out and find the right partner that's a family office. I like the dynamics of it. Where would I start? How would I find the family offices in that sector?
I would go start with the people who've done that successfully before, right? That's a very lucrative industry.
Yeah.
And see where they are, right? Or look at people who have done roll-ups in similar spaces, right? Or who have sold businesses in similar spaces. And to go talk to the founders, go talk to because a lot of these people, this money, like, it's quiet, right? It's often behind the scenes.
No, good advice. So when you're evaluating an investment, how do you gauge the entrepreneurs and the founders, and how do you peg it as far as I want to bet on these guys or these people?
A few things. First, like running a startup is not for the faint of heart, right? To get to a certain point within a startup, you have to be a certain level of intelligence, right? And so the level of intelligence, I think, is par for the course. As I get older and interact with more people, and I'm sure you've seen this too, one of the most surprising things year after year is how few people on this planet have the combination of a high EQ and a high IQ, right?
Mm-hmm.
And I think one of the most important skills is storytelling, because storytelling, whether you're selling, whether you're hiring, whether you're fundraising, whether you're building, it all comes down to telling a story, right? And so if you're selling software, if you're building an agency, if you're selling a beverage, like what are you communicating to that customer? You're telling a story. Telling a story to try and get that customer to buy that product or buy that service or hire that company. And so I think storytelling is the most important skill. I think the other thing is, would I work for this person? And if I can't say that I would work for this person, then why would other people? I'm N equals one and I'm unique, but I'm not that unique, right? And so this person needs to be able to lead a company, be able to hire people, and be able to tell a story, to sell, hire, fundraise. And so those are some of the traits that I look for.
The one trait that is tough to gauge for, but I view it among it's at that level, is grit and tenacity.
Yes.
Shit's going to happen. Everything's going to go bad. Everyone's going to say you're done at some point of time, and there are no other options. And the successful entrepreneurs will find a way, resourcefulness, but they just don't give up.
Yeah. And so, a lot of times we're back in second-time entrepreneurs, second or third-time founders, right? Because if you founded a company before, you've definitely had shit hit the fan, right? Like stuff has definitely gone south. And so if you've dealt with that in the past, you can probably deal with it again in the future.
Have you dealt with entrepreneurs? Well, of course, especially in the startup world, is not everything is going to work. Have you backed founders that did not have a successful exit in their prior venture?
David and Ben at Ollipop, their first company was actually a soda company called Obi, which was very similar but different brand, a little different taste profile in a glass bottle, and it didn't end up working out. And so that was, but the benefit of backing someone who didn't have a successful, the hope, exit in their first venture is they learn what not to do.
Yeah, that's amazing. Well, Nate, I know that we have limited time today. I appreciate every minute you've given us.
Thank you for tuning in to Deal Playbook. If today's episode sparked an idea or gave you an edge, share it, subscribe, or leave a review. Remember, opportunity doesn't wait, it's created. Until next time, keep building, keep scaling, and keep playing to win.